get started, I'm going to introduce our subject matter experts here today. I have the pleasure of working every day with Steve. Steve, please introduce yourself and say hello, please.
Good afternoon, everybody.
And then we have Drew. Drew, please introduce yourself.
Hey, everybody, how are you? Drew Ruggieri, Southern New Jersey, AE.
Great, great. And Steve's located on the east coast of Florida. So, all right, guys, let's jump into this. So today we're going to do a deep product dive into our bank statement program. Our bank statement program is our most popular program. And then, as I mentioned, we'll take you through quick quote. We'll also show you who these bank statement borrowers are, and then where can you find these self-employed borrowers. So we're going to jump into our bank statement highlights of our bank statement program. But before we do, we're going to launch a poll, and this has really been enlightening to us. So the poll is, who has originated a bank statement loan for a self-employed borrower in the last 12 months? While the poll is up, I do want to share a couple of statistics. In 2020, new business applications grew over 2019 by 24%. That was the largest increase in new business applications in over 10 years. And in 2021, new business applications grew over 2020 by 22%. So this is the largest growing segment of the workforce out there. So poll results. Wow, yeah, wow is right. Still 66%, and that's, guys, we've been doing this for 25 months. Obviously, we've been originating for over 8 years, but for the last 25 months, we've been doing these polls, and 70% have not originated a bank statement loan in the last 12 months. So a lot of opportunity. Hopefully, we're going to get that percentage to move a little bit. And we're going to do that by Steve's going to cover highlights of our bank statement program. Steve, go ahead.
Awesome. Thank you. And thank everybody for your time. Let me just say that this is the single most important product out there in the market that you should be really excited about. It's been the dominant portion of what I've been doing with Angel Oak, and I'm in my 9th year. Probably 75% of all my volume is generated just on the bank statement program. Agency lenders and banks don't offer this, so this is a phenomenal opportunity for those that have not done the bank statement program to learn about it and go get the business. It's definitely out there. As far as self-employed borrowers go, I think the last census was about 59 million people, or somewhere in excess of 36% of the population in the U.S. would qualify as truly self-employed or gig workers or independent contractors. That's amazing. And just since, we'll say, COVID or the last few years, it's rapidly increasing. Everybody wants to be remote based, or a lot of employers are now converting these W-2s to 1099s, and just a tremendous opportunity to really get used to and comfort and get the good feel for offering this program. It's tremendous. As far as the program goes, before we get into some of the highlights, I like to say that this program increases the purchasing power of the borrower due to the fact where if you were to take them conventional or look at the tax returns, it's not going to show nearly the amount of income as what we would calculate using the bank statement program. So by offering this program, it increases the purchasing power, so they can afford a home that they actually truly desire, and the realtor will make a higher commission. The loan officer origination is higher. Everybody's happier because you're going to qualify for a much higher priced home than you were if you were to go on the lower conservative income being reflected on the tax returns. So just a tremendous opportunity to learn about this program. As far as the highlights go, we offer loans up to $3 million with a minimum of $150,000. A 12 or 24 month business bank statement program is offered. 12 or 24 months could be either the business or the personal, not both. It's one or the other. If a borrower owns multiple businesses, we can use two. As long as there's no commingling, we can use two separate accounts. Currently, the seasoning on foreclosure, short sale, deed in lieu, bankruptcy, housing events are 24 months as of today. As far as rates go, all we do is 30-year fixed. There are no ARMs available. As far as the self-employment time frame, you must be truly self-employed or a contractor for 2 years. Regarding the percentage of ownership, if you're going to be qualified using the business bank statement, you must be a 50% minimum owner of that business. If you're going to qualify using personal bank statements, you just have to be a 25% partner in that business to qualify. We do offer it on purchase, cash out refis, and rate and terms. It's available for all occupancy types, whether it's a primary, second home, or investment. We do offer 40-year IO as well. We do also have a 1099 option available. This is really popular for sales reps and realtors. Believe it or not, I do quite a bit of personal loans for the realtors themselves. The reason why maybe you would go 1099 as opposed to bank statement is if perhaps the realtor or the 1099 contractor has multiple bank statements. The 1099 may be stronger than where he shows his compensation divided over several accounts. So with the 1099 program, it's the same platform, same guidelines, same terms. We would use last year's 1099 form plus a year-to-date 2022 commission earnings printout from his employer. Real simple. We also consider non-warrantable condos on the program. And if the loan amount was to exceed 1.5 mil, then there will be a second ordered appraisal on it.
Yeah, great, Steve. Great points there too. And like we said, this is a deep dive. We're going to get into your questions here, we promise you. So I see a bunch of questions coming in, but like we said, we really want to make you an expert. So Drew, give us, what are the most important things that you like to see on a 1003 specifically for our self-employed borrowers?
So you definitely want to fill out the application, like every application, as thorough and as accurate as possible. If you're using business bank statements, make sure that the business listed on the application matches your information that's listed on your business bank statement. You know, your borrower may call his business kind of a shortened version or something different, but the actual business bank statements may list something else. You know, we're going to calculate the income for you. You're going to send us the bank statements, and within 24 to 48 hours, we're going to have a qualifying income that we can use, that you can use to qualify the borrower. So I always recommend my loan officers just putting $1 on the income listed on the 1003. So you certainly don't want to shortchange the borrower, you know, out of any income that they may be able to qualify for using the bank statements. One thing I also recommend is if someone is a first-time home buyer, we don't allow first-time home buyers living rent-free, so you'll always want to list the amount of rent that they pay and can verify on the application.
And then assets also, you know, we're really,
of course,
you know, a lot of the loans, almost 30% of loans we close don't meet our guidelines. And the reason is you have compensating factors. We might require 6 months in reserves, but the borrower has more than 12 or whatever. So, you know, we have an account executive that says, you know, that loan application is truly the DNA of the borrower. And that helps us really dive into your borrower and work as hard as we can to get a yes for that borrower. So, yeah, thanks, Drew. And that's key there is we are calculating that income for you on your behalf. So one of the things I've really been stressing, if you know up front you are going to be working with a self-employed borrower, why not get their tax returns and at the same time get their bank statements and go down those parallel paths? And as Steve mentioned earlier, you know, you're going to increase that borrower's purchasing power. But if you know you are meeting with a self-employed borrower, get the tax returns, get the bank statements. We will, and a couple of questions here. Steve, so Drew, thank you for covering what the loan application needs to look like. Steve, give us a look at what we're looking for in a credit report.
As far as a credit report goes for open trade lines, and when I say open, they could also be closed, but it has to have activity show within the last 12 months. So it's either 2 for 24 months or 3 for 12. So we're going to analyze and just make sure that those trade lines, whether open or closed, have activity within the last 12 months, showing either that. And then, of course, we're going to calculate, like Drew said, we're going to calculate the payment shock and verify the housing history and give you more of of a pre-underwrite, where these pre-quals are as good as the information that you're providing to us. So we're not just spending a few minutes, we're actually taking our time and doing everything like a junior underwrite would be.
Yeah, that's a great point, Steve. You know, we are doing a pre-underwrite on that. You're getting the income. As Drew said, we're calculating that income for you. Steve's looking at the credit report. We're looking at the 1003. You can feel confident that when you send your borrower out shopping for a house, that pre-quals is good. It's good to go. I mean, because a lot of the deals we get is someone who's been pre-qualified thinking that they got their tax returns, and then the tax returns actually come in, and then everyone's hair is on fire. So again, I stress, get those tax returns up front. So we got a ton of questions coming in here. Let me jump in here. Hey, Steve, first question I'll throw out to you. Tina's asking, if one borrower is self-employed and the other's W-2, can we still use the bank statement program?
Yes, we can. So I see that a lot, and a lot of times if the spouse, the one spouse, let's say the husband is self-employed, we'll use his business bank statements. The wife spouse is W-2'd. We'll just show her W-2 and pay stubs, and we can use that in addition to what we calculate for the husband's self-employment income.
Yeah, Drew Marcus is asking, you know, why would we send 12 or 24 to you, bank statements?
Well, so we dropped the pricing so there is no pricing difference on the 12 or 24 month at this time. So really the difference would be is really kind of dig into your borrower, kind of have that conversation. How's your business performing? Have you had a significant increase in the last 12 months? You know, or is it pretty consistent over 24 months? We're going to calculate the income for you with our team. You know, so I always recommend, if you can get 24 months from the borrower, let's get to 24 months. We'll see where that average is best, and what gets your borrower approved for the most, house payment.
Yeah, thanks, Drew. Steve, I got a question in here about what about multiple 1099s?
One, the borrower has to work for one company, so one 1099.
Robert, great question. You know, but as Steve mentioned, it's only one. Yeah, and Drew, I know we've mentioned this, but I just want to clarify for Albert here is, how long do they have to be self-employed for?
They have to be self-employed minimum 24 months, 2 years.
Great. Yeah, thank you, Drew. You know, even though we might only use 12 months of bank statements, we do have to prove that the borrower has been self-employed for 24 months. Steve, I know you mentioned when you covered the highlights, talk about expense factors and what we kind of ballpark some of the expense factors. I know we default to a 50%, but give us some other expense factors, please.
Awesome. So correct. Default is 50% for the initial calculation. The flexibility is if the borrower was to obtain just a simple 1 or 2 sentence letter from any third-party accountant or CPA or tax preparer or bookkeeping company, just stating that due to the nature of their business and the industry type, whatever they are, we will consider less. So the letter would read something like ABC Companies, let's say ABC Companies expense ratio or expenses do not exceed 33% of the gross sales or gross revenue. And then we would use that figure. We can go as low as a 15% expense factor, meaning 85% of those deposits would be considered income. Of course, it's got to make sense, and it's got to be customary to that type of industry, like a 1099 salesperson out of the house, or maybe a one-man handyman working out of his home with no brick and mortar office. So it has to make sense, but we will go as low as a 15% expense ratio.
Yeah, and then Drew, what's our debt to income ratios for our bank statement program?
So you're looking at a 40% for the housing and 50 for the back for the total.
Right.
Those are hard stops.
So Annie's asking, I know Steve just went to with a 50% expense factor. Does that mean, yeah, so we'll only use 50% of the deposits of the gross deposit. So just want to make sure we're clear on that. And as Steve said, we'll go down to 15% expense ratio. That means we'll use 85% of the deposit. So and again, we're going to get this all up front. This is all going to be done and calculated up front. So there's no unknowns when you and your borrower are going shopping. So Steve, do we ask for a 4506 on this? It's a good question.
We do not. There are no transcripts. There are no tax returns ever to be ordered or even uploaded to this file. Neither.
Yeah. So, hey, Drew, Steve mentioned interest only earlier. Give us a breakdown of how that works and how they qualify.
Sure, absolutely. So it's becoming more and more popular with the rising rate environment, without a doubt. So our option is it's a 40-year term. The first 10 years are interest only. Automatically after those first 10 years, it will switch to a 30-year fully amortizing principal and interest payment. The borrower does need to calculate off that 30-year interest principal and interest payment. So we're not going to calculate them off the interest only payment, but it does give them the flexibility to be able to make that lower payment once they get into the house or have the new loan.
Yeah, Drew, self-employed borrowers are very, very cash flow sensitive. So, 1 month they have a great month. They might put a little bit more towards the principal, and that will recast, just so everyone knows, that will recast. So, but yeah, IO, as Drew mentioned, is becoming more and more popular. Steve, what's our maximum LTV right now?
As of today, the maximum is 80.
Yeah, and we say today because things are always changing. So, there could be some expanded LTVs coming out in the very near future. So stay tuned and stay in touch with your account executive. So Alan, hopefully that answered that question. We talked about delayed finance. Did we talk about delayed financing? I don't think we did. Steve, have you covered delayed financing? There's still a pretty hot market, and some people just want that house. So talk about how delayed financing works.
Sure. So delayed financing is if a borrower was pressured for time, contract, whatever the case is, and needs to pay cash and close that property as soon as possible, or with some help and assistance of some private hard money lending. So as long as that is done, either cash, free and clear, or with some private hard money lending, we can do it. It's either going to be within a 90 days if there's hard money used, or up to 6 months if it's free and clear using the borrower's cash to close, free and clear property, no mortgage. Within 6 months, we can call it delayed financing, so he can recoup the funds that he used to purchase.
Yeah, so I know prior to when rates started rising, now it's a normal market, but we had a lot of delayed financing because you had multiple bids, cash offers on homes. Annie, I'll answer this question for you. Yeah, I know Steve said the max LTV right now is 80%. Seller cannot hold a second on that. That's max LTV, CLTV. Sorry about that. So, yeah, we're just looking, Don, thanks for showing up. He ran a little late. Yeah, Don, we're just looking at bank statements. We're not looking at tax returns. We're not pulling a 4506T, nothing like that. Drew, talk about reserves, please.
So we're going to require that your borrower has 6 months reserves, 6 months of the full pity payment, principal, interest, taxes, insurance, and association if there is any. So 6 months.
Yeah, Stephen, talk about some of our foreclosure seasoning and bankruptcy seasoning, if you mind. I know we covered it in the highlights, but maybe just clarify there. We had a couple questions coming in there.
Sure. So today's guidelines, today's programs, it's 24 months seasoning on any housing event. Housing event could be a foreclosure, short sale, deed in lieu, loan modification, greater than and equal to 120-day late, 24 months seasoning. BK Chapter 7 as well, 24 months. Chapter 13, however, 2 years, 24 months from the filing date, but as long as this discharge, just 1 day discharge on a Chapter 13, it qualifies.
Yeah, Drew, thank you, Steve. Drew, Nestor's asking, can this be used for an investment property purchase?
Oh, absolutely. So certainly you can use the bank statement program for primary residence, secondary homes, and investment properties. Absolutely.
Uh, and Steve, cash out, great question here again, cash out. Can we use cash out to cover reserves?
Yes, we can. Great question. Cash out will satisfy and go towards it on the reserve.
Yeah, and right now, just so everyone knows, right now, we're seeing almost 30% of our transactions right now are cash out. Everyone's had a great appreciation in their home, and specifically for self-employed borrowers, they're wanting to reinvest in their business. So great questions, keep them coming. Yeah, so Karen's asking, Drew, can we use the same bank account for the income and for the reserves? Pretty.
Yes, absolutely. So we're just need to make sure that the borrower, as long as they're 100% owner of the company, yep, they absolutely can.
Great questions. Hey, something else we're gonna, keep the questions coming. A couple of things we wanted to share with you because it's really, and I gotta pull this up. Hold on, give me just 1 second here. I'm gonna bring up one slide here. A lot of people ask us about, where this business comes from. So just to kind of give you, business professional services makes up about 17% of the borrowers that we lend to. So, we do a really good job tracking who these borrowers are. Contractors make up, I have some of this stuff on my wall, 15%, and realtors make up 9%. Of the deals we close are actually realtors. And then you can see the rest, wholesale, merchandise, and health. You guys can read this. Maybe we'll send this slide out with the presentation if we can, or just make that part of the email that goes out. But, as you're running your errands every day, think about these segments of these self-employed borrowers. They really do make up a good portion of our business. Steve, someone's asking here, Dan's asking, is there a max unit owned for investment properties? Can you kind of clarify that for Dan, please?
4 unit. We will do up to 4 units. So duplex, triplex, quadplex, anything up to 4 condos.
And then Drew, a couple other good questions here. Example, a lawn service, bank statement. No, that's a question we'll have your accountants. That's a really specific scenario there. So we'll have Drew. They're asking, do we allow ITIN borrowers on our bank statement program?
So the bank statement program is no. Unfortunately, ITIN borrowers are full doc only, so they're not eligible for bank statements.
Yeah, thanks, Drew. And then we can a couple other quick questions I saw here. There's a lot of questions about investment properties. Next Thursday, we are covering our debt service coverage ratio. So don't forget to sign up for that one. It's a shameless plug, but we're doing a deep dive into our debt service coverage ratio program. So a lot of great questions. All right, let's, one of the other things we promised we would do here, we're going to have Drew show us how to do a quick quote. And let me get back to sharing my screen here. I apologize. So Drew, can you see the screen?
Yep.
All right, so we're going to go back to the home page. And, a lot of people have asked about rates. A lot of people have asked about how do I get a prequal to you. So Drew's going to take us through a scenario. So again, on our website's really easy to navigate and easy to use. So, but Drew, I'm going to click on here, right?
Yep. So yeah, I
Yep.
always recommend, my folks to, bookmark that main page. So you can get to everywhere. You can get to the portal once you, have a live loan. You can get to the resources, you can get to the program information. But for today, we're going to go to the quick quote, where within about 2 minutes, you'll be able to get a rate and figure out if your scenario fits. So you're going to select the broker channel in most cases. Let's do, yeah, so we'll do 500,000. Let's do 740, right? And then we'll 75 LTV. So as you can see, the screen is refreshing. But for our particular scenario, you definitely want to make sure that you go down to your income documentation. You want to select either your 12 or 24 months worth, whatever you're collecting from the borrower, and you've got to keep scrolling. And so basically, the way kind of my brain works, people always ask about the broker or the comp. What should I put the comp as? So just leave it as 0, so you can get the true base rate for the borrower. So literally within, what was that, 30 seconds, you have the ability to figure out, okay, my borrower can get an 8.125% interest rate, and certainly a fantastic rate for someone who would want to qualify for more house. You can then click on, if you say, all right, well, listen, my borrower wants to pay some points, or maybe I want to do some lender paid comp. So you can click on the view rates. It takes you to the full rate stack, and you can navigate from there. So for our purposes, you want to select 8.125, and then we will select that option. Okay, so you want to scroll back up, because sometimes you're not quite at the top of the screen. If you have a 3.4 file already prepared, you can certainly upload it here. It does help once the pre-qual is converted to a live loan. But if you don't, and if you're not sure what the heck a 3.4 file is, you can just click next. So step number 3. So it really summarizes your scenario, making sure all that information is correct. You want to scroll down and just pay close attention to everything that has a red asterisk. I'm the only Drew in the drop down, so you can't not miss me. The rest of the information is your information. Keep scrolling, and this is where we want you to drop a PDF of the 1003, PDF of the credit, and then the box that you want to put the bank statements in is the box below where it says bank statements with the red asterisk. That drop box there will be able to take 12 or 24 attachments. Everything else will only take 1. So you just want to make sure you're uploading everything to the proper spot. You can keep scrolling down, fill in any bankruptcy or housing event. You want to type us a quick note saying, hey, Steve, hey, Drew, this was the deal we just talked about. It's that the guy who, has the lawn service, and then you hit submit.
Yep.
All that documentation comes to us and gives us the ability to push your bank statements to our review team for income analysis.
Yeah, great job, Drew. Yeah, and as Drew mentioned and Steve's mentioned, this comes directly to Drew or Steve or any of our other account executives across the country. So, and usually I'll tell you, if you have all the bank statements there and the 1003 is complete and there's no questions about the credit report, you can get this in 24 hours. I know we kind of try to over-promise, under-promise and over-deliver, sorry. And we'll say 24 to 48, but if everything's there, they'll knock it out for you in 24 hours. So, great job there, Drew. And again, bank statements, as we mentioned early on, this is the largest segment of the growing of the economy right now. So really get to know these programs. So Steve, a lot of people have talked about, how do I market these programs? And before we get into our marketing portal, I do want to bring back up that PowerPoint, because this is really, hold on, I got to share this. I love technology here, okay. So Steve, we asked, where can you find these bank statement borrowers? This is just a snippet, and we'll hopefully send this out along with the copy. And again, this is being recorded, so we will get this out to you. If we didn't get to all your questions, we will get them. We will get your account executive to reach out to you. But just start to think outside the box. All these, where you can find these borrowers, right? Realtors, credit unions. Steve mentioned these large banks aren't doing these loans. Your CPA, if you have less than a 50% expense ratio, you're going to need a CPA or a tax preparer. Why not ask them to market to their database? Financial planners, all these people are good sources for bank statement borrowers. So, all right, I'll get off my little soapbox here, Steve. We'll get back to the marketing portal here. Hold on. All right. So, Steve, can you see the screen?
Yes.
All right. So to get here, obviously, I'll let you take us through this, Steve. We have to log in to get to this part of our portal, though.
Also, we see and we do a lot of just think about your everyday, like John mentioned, the local pizzeria owner, your auto mechanic, your hair salon and your nail salon, local insurance agency, on and on. It's tremendous opportunity.
Yep. So Steve, talk a little bit, talk a little bit about these flyers a little bit and how some of your brokers are using them.
So the majority of my brokers do use these. They're complimentary, free professional flyers that our marketing department created. Fantastic job. They're all customizable and white label per se, so they're not going to reflect Angel Oak's information. It's going to be for you to market yourself and your company to your referral sources. So as you can see with the sample there, the young lady at the bottom, Tiffany, LO, has her information there. All you're going to be doing is really filling out the information as easy as it looks on the left-hand side with your contact, and then you can upload a logo within seconds. This is going to be customized, so you're going to see it just reflecting your information.
Yeah, Steve, and the beautiful thing about it, Tiffany has filled out her information here. It's going to fill all these flyers automatically. So you're not putting your contact information or your picture or your logo on each one of these flyers. And the beautiful thing you can see here, we also have them in Spanish. So take advantage of these. 66% have not originated of you on this call. You've taken this time out of your day to learn about bank statements. Now go market it. And it's just a underserved option we have for you. Steve, let's talk a little bit about social media too.
So there's many sources, even with the realtor presentations, the social media you can utilize. Just explore. I would say just spend some time. This is going to be your most important piece, which is going to help generate a lot of income for you, whether you're on LinkedIn or Facebook or whatever. Just explore the marketing portal and you'll find that there's some complimentary, tremendous opportunities for you to utilize what we created for you.
Yeah, Steve, exactly. They're for Instagram, Pinterest. We've created that content, whether it's directed to a realtor or it's directed to actual borrowers. So we've done a really good job creating this for you, and it's free. And then last but not least is, as Steve mentioned, a realtor presentation. Steve, how many of these do you do?
Usually a couple a month. At one point it was 3 or 4 a month. I'd say now average 2 a month. We're available if it's local in person or via Zoom or on the phone conference. Tremendous. We're there to support you. We're not going to talk about our company. We're going to help market and support you to whoever you're doing the presentation for, the group of realtors. But it goes a long way because a lot of the realtors that are working with these self-employed clients, they don't really understand or know how the product works, and that's where you're going to come into play. And we're going to be your backbone, and we're going to be there for you to help market yourself and the program.
Yeah, Steve, I kind of consider this almost the most powerful presentation an LO can have an Angel Oak account executive do on their behalf. It's you don't have to be an expert, although you're on this call today and you're learning, and we really, really appreciate you being here. But take Steve, take Drew, take any of our account executives, either Zoom or in person, and they will present on your behalf. They don't say anything about Angel Oak. They're not handing out their Angel Oak business card. We've had a lot of questions from Dan here. Steve's gonna go in on Dan's behalf and say, what are you gonna do when you have that self-employed borrower? You're gonna go to Dan, because we're just one of Dan's investors, and we do bank statement programs for self-employed borrower. And you are educating, your referral source too. And as I mentioned earlier, and I showed, 9% of the loans we close are with realtors. So if you get 12 in a room, the odds are you're going to get their loan, right? So, Steve, we've had a question here. I know you mentioned delayed financing. It's come up a couple more times. Before we close out, I do want to get just one more, initiative on or explanation of delayed financing, please.
So delayed financing is for your borrower who is maybe in a time crunch or a contract expiring. They're going to pay for that property with their own funds, cash, or with some hard money private lending. And if that's within a 6-month period, if they were to pay cash, or within a 90-day period from the time they close using hard money private financing, we can do that loan and call it delayed financing, so they can pay off the hard money lender if applicable, but also recoup their funds used to purchase the property for cash.
Yeah. So again, this is being recorded. We will get this out to you before end of day today. Drew, anything in closing you'd like to share with the group?
Yeah, I mean, it's as you guys have said, and Steve said several times, just every day kind of I'm sure most people are every day aware of who they're dealing with, who they're interacting with, but it's as simple as when you go to lunch, when you're talking with the owner of the pizza shop, you're going to get your hair cut. Those are the opportunities that are hidden beneath the surface, as they say. And with knowledge is power. So more information that you have about the bank statement program, the more you'll be able to see those opportunities.
Yeah, Drew, I love that. So what if you had that flyer for self-employed borrowers, right? And you're running your errands around. Why not just put it on the counter? It's your free advertising. So I love that. Steve, anything else in closing?
I would just say offer to do for the realtors, offer to do open houses, because if you're gonna pick and choose which open house. If you're gonna do a $1 million open house, the kind of buyers that are coming through. They're not your local W-2 salary, lower wage earners. Open houses, I've got a lot of LOs that do that, and they market themselves as the bank statement guy or the bank statement gal. And you've got people that are interested in a $1 million, $2 million home. They're self-employed. You're going to pick up some nice referral sources.
It's a great point, Steve. And that's another question that didn't come up, but we will do a pre-qual on a TBD. So just remember that as you're working with that self-employed borrower and you get those bank statements. We don't have to have an address to do a pre-qual up front. We'll calculate those bank statements for you. We'll look at that 1003 and we'll review that credit. And as Steve and Drew have alluded to, it's a pre-underwrite. So, and that's the income that's going to be used throughout the entire process. So, Steve, thank you. I know you're crazy busy. Drew, I know you're busy too. We really appreciate you guys taking the time out of your day. For everyone on this call, thank you. On behalf of everyone here at Angelo, we appreciate you. For those who've closed loans with us, thank you for your business. For those who have not, please give us a shot at your business and just have a great afternoon. And if you need anything, contact one of your local account executives. This is recorded. We will get this out before end of day today. Thanks again, Steve. Thanks again, Drew. And thank you for everyone being on this call. Have a great afternoon.